Hello, welcome to Harbor Rock Wealth Management's Planning Tip of the Week. My name is Ruben Smith, and I am joined by my good friend and partner, Jimmy Luster. He is going to help us today navigate life insurance and the idea of term insurance versus perm insurance.
Awesome topic. Thank you for having me again.
Jimmy, welcome. Welcome back. I must say, you look a little sour today.
Like a little sour, like sick? Or
No.
You couldn't be talking about National Whiskey Sour Day.
Perhaps I am.
Could you?
Yes.
Okay. Well, some people believe it's August 25th, but more people lean to today, August 29th, National Whiskey Sour Day. So with the heat, the hot days here, it makes a great happy hour refreshing cocktail. And I'll share with you a simple recipe. It's 2 ounces of your favorite bourbon. It is 3/4 ounces of lemon juice, 3/4 ounces of simple syrup into a Boston shaker filled with ice. Give it a shake, 20 seconds or so until the outside freezes. And then you use a Hawthorne strainer, which is a common bar strainer, into a glass, typically a rocks glass full of ice. Garnish it with a cherry. If you want to get daring, you can put a dash of egg white into the shaker before you shake it.
Interesting.
It'll give it a nice
A little creamy.
little fizz.
Oh, okay.
It is a sour fizz drink,
Okay.
and it's a nice drink on a hot day.
Very good.
Yeah.
Well,
We'll
thank
give
you.
it a shot sometime.
All right, so getting back into the topic du jour, we are going to talk about life insurance and the differences between term and more of a permanent type policy. Or
Okay.
So, what's your experience with insurance, or what's your thoughts on it?
I don't, I don't personally at this time have my own insurance policy, but I'm considering it. I'm at that time in my life that I have been advised to take a look at some of my options. More of a term policy for me at this point. And, that being the breadwinner of my family, we're dual income. My wife works and we all contribute to our expenses. But at this point, and heading into maybe the next 10 to 20 years, I think my income needing to be replaced should something happen to me would be a huge benefit. Obviously, it's a tough thing to talk about.
Yeah, nobody likes to talk about their own mortality.
It's always the benefit.
Planning.
Yeah, it's always the benefit that you never want to have happen. But I feel like it's something responsible that I in my family, my father, my parents had dual income and they both had great careers, but I kind of take my dad's lead on that as the protector of the family and trying to always do something that would take care of us in the event something catastrophic happened. I don't know. I feel compelled to take on the same responsibility. I don't have any children, but I have a beautiful little 2-year-old dog, and I love my great wife, and I would want to leave us in a. So I'm looking into it. I don't know a ton about a lot of the differences. I know enough being in this industry that I can speak in general to it, but I would be curious to hear some of the differences and how you arrive at making the right choice.
Sure. So it's like we were talking about. It's not easy to plan or have that discussion around one of your loved ones, you or one of your loved ones not being around.
Of course.
But the last thing you want to do is, if something were to happen to you, is to leave them financially distressed as well. So if you can solve for that ahead of time, I think it gives you peace of mind knowing that if something happened to you or the breadwinner, it's just a really smart planning topic and strategy to implement. So let's dive into term insurance first. Okay. Term insurance is going to be the simplest form. So the reason why it's simple is it's very finite. So you typically buy a term insurance for a specific term or period, whether it's 10, 20, 30 years. And it's normally what's called a level term policy, which means it's the same premium or payments that you make on a monthly or annual basis, and it's the same death benefit throughout the entire length of the policy.
Okay, so the payments and the death benefit remain the same no matter what?
No matter what.
Okay.
Yep. Now, if something happens to you, if you pass away in that term, then your beneficiaries receive the death benefit completely tax-free. So the policy paid. If something does not happen to you and you get past the term, the policy is no longer in force. So normally we make these recommendations for either younger couples or maybe there's some cash flow concerns that we want to make sure that we're not putting too much money into a life insurance policy if it could be better directed in other areas. Um, but the main thing when when it comes to planning with term insurance is that you want to make sure that your policy benefits should match whatever financial obligations you have
Makes sense. Okay.
and the timing of those obligations. Okay, so let's take a mortgage. A mortgage is a 30-year vehicle typically.
Right.
Okay, so if you're newly married and you just bought a house, you probably shouldn't go out and buy a 15-year term policy. You probably need a 30-year term policy.
So you're betting on the likelihood of timing there. It's not likely that something would happen. Yeah.
Exactly.
Okay.
Exactly. And in your case, you mentioned being a breadwinner. So oftentimes you want to replace lost income. I typically recommend 10 years. You don't necessarily want to put the surviving spouse or your loved one under the gun to go out and replace your income right away.
So you're saying 10 years of income
of lost income, right?
for the benefit amount.
Exactly.
Okay.
So we add that back in. So we would add in your mortgage balance. And then if you have kids, so what are future college expenses going to cost? Or maybe you're carrying a college loan still from when you went to school. There's any debts or future expenses that you want to solve for, so that your spouse in this case wouldn't need to worry about it. That's really what it's for.
Did I hear you a minute ago say that you could potentially be over covered? Does that happen too? Or?
Well, yeah, sure. So we've, part of the fact finding and data gathering sessions that we have with clients that we're bringing on board, we find that a lot of times they're hanging on to policies that they don't necessarily need anymore. So maybe their mortgage has been paid off, or they're in retirement and they don't necessarily have debts, or they don't have the need to replace lost income. So a lot of times we actually help clients unwind some of these policies that they're hanging on to because they needed them 20 years ago and they don't necessarily need them today.
Okay.
Okay.
Makes sense.
So one benefit of most term policies too is because they are more cost effective and they'll solve for an immediate need. A lot of them can be converted to a permanent policy down the road. So for me, that's actually part of my own personal financial plan.
Okay.
Is I have a term policy now, and probably within the next 5 years, I'm going to be converting a portion of my policy into something that's going to last, hopefully, for as long as I'm alive, right? For more permanent.
Okay, makes sense.
So that's a good segue into permanent insurance. So a permanent policy is going to be, an example of one would be either whole life, universal life, variable universal life, index universal life. There's a number of them out there.
Sounds like there's some choices there.
There's a few options out there, and all of them come with different pros and cons. But the bottom line is that they tend to be more expensive vehicles.
Why would that be?
And it's because they're building a cash value. So they're whether you're having that money actually invested into the market with more of a variable type policy, or you're building a cash value within more fixed interest rate policies like a whole life or universal life. But they tend to be a little bit more expensive.
So as opposed to a term, which that term's up, there's nothing left. I don't get any money back. There's no benefit. I actually have the potential to get a return on my money, not just a death benefit.
Yeah, perm policies also, permanent policies, once there's enough cash value in there, you can take loans from them. You can have access to the cash value.
Okay.
You can get pretty creative from a planning standpoint.
More flexible. All right.
Absolutely. So, but perm isn't necessarily permanent policies aren't necessarily for everybody either, because you have to be able to afford it, right? Okay. You have to want or have a need for lifelong coverage. Okay. And where we often see permanent policies from a planning standpoint is when there's more complex planning needs. So whether it's you have a potential estate tax problem and you're trying to avoid future estate taxes or offset some of those taxes for loved ones, you can fund a life insurance policy in what's called an ILIT, an irrevocable life insurance trust, which keeps it completely out of your estate. Or what if you had a dependent adult child, with a disability or something? There's ways to have a trust own a life insurance policy for their benefit. So can get very creative. They're two separate animals completely.
Yeah. So at that point, it doesn't seem like there's really a bad choice there, only the right choice for what your specific needs are.
Well, I think the bad choice would be just
Maybe,
neglecting the idea of getting insurance, and whether that's one of these policies or maybe through your employer. Um, there's a good chance that if you're married or you own a home, have a family, that you need life insurance, but do you have enough?
so what I'm taking away here is term is typically cheaper.
Hmm.
Maybe simpler needs, maybe just simply replacing an income or being able to handle the obligations
More of the quick
that
band-aid,
you
right?
have in
Yeah.
place,
Yep.
just to make sure that that individual that's being left behind doesn't necessarily have to make a quick decision or decision at all in some cases
Hmm.
to, like you said, go back into the workforce or take on that role again. And it seems like the permanent choice is that you have the means to afford it. It's a little more expensive,
Hmm.
but it could be lifelong at that
Right.
point and
Right.
quite a bit more flexible
Hmm.
and multiple benefits
Right.
at that point. So it seems like there's a lot more options there. Another good reason to get back in front of your advisor to discuss those options because, wow, it seems like it could be overwhelming.
Absolutely.
Yeah.
Absolutely. Well, thanks for joining me again.
Yeah, that was fun. Thank you.
If any of you have any questions regarding any of these term or perm policies, feel free to reach out. Thank you for watching. We'll see you next week.